Robschild, no investment advice. Welcome to the show where we view financial markets using technicals, macro, Ben Graham's investment philosophy, and crystal ball gazing. Today is Thursday, October 17th, 2024. Today's episode, we start by bringing up the fact that initial jobless claims came in lower than the expected in the last of this reading. Yesterday's video had a bit of a clickbait title. I thought today may have been like a Black Thursday event. I mean, imagine if the initial jobless claims was way higher, than the last reading of this. That would put it higher than it's been in years. That would have scared the market big time. And it didn't get that scared, although it's still looking a little scared, interestingly. I mean, for initial jobless claims to only drop to 241 is not even a huge drop. So when you look at the chart, it still looks elevated. This is one of these things that it could really go either way from this point. I mean, it can go either way from any point, really. But considering where we are in the business cycle, it wouldn't be unexpected for me at all for the next reading of this to go to new highs that we maybe haven't seen for years at this point. I thought that Taiwan semiconductor earnings would be weak based on the fact that we just had another semiconductor company come out with very weak earnings. So, you figure, well, if people are spending less on these things, well, they're probably not doing as well either. Actually, they came out with pretty great numbers. Their stock's up 10%. It was up 15% at the beginning of the day. By the end of the day, I believe up about 10%. So that these two things combined didn't cause a Black Thursday. But there are tensions in markets, and we'll go through the charts in a second, the ones that caught my eye. Daily reminders, if you want to hear me walk through them, I do it on Monday's show. Nothing's changed for today. Crystal ball reading remains. Bear market starts soon. The Fed won't cut fast enough to save the economy. Starting with SPX or SPY or S&P 500, we closed 0.02% lower than yesterday's close. So today's numbers were really more of a non-event than anything else. It looks like we opened at an all-time high and the bears took control and went straight back to sort of, I'm going to call it a neutral point for now. The VIX finally dropped below 20. Notably, the VIX futures curve, I'm not going to bring up the chart today, but it's still inverted. So this is still high in the VIX. The markets are still more worried than they are not worried. It's notable that today's data was, in my mind, pretty bullish news coming out, and yet the VIX only drops a little bit while still elevated, and the S&P 500 actually loses 0.02%. So I think the bulls were looking for even better numbers, I suppose. The one market that's really diverging from the rest and continuing to surprise me is the US dollar. Look at all these green candles. By the way, in any chart pattern, when you see just green, 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 nothing ever moves like this. This is a vertical straight up move. This is the kind of move you'd see in the dollar during the the COVID crash. Highly unusual movement in the dollar. This is all while other markets are seeming a lot more complacent. As I said yesterday, somebody's wrong here. Either the dollar needs to go down in order for, the strength in the stocks to make sense, or the stock market is not right here. And if I'm going to put my money on it and guess, I'm guessing that the stock market is peaking here. Again, I've said this many times before, but, again, where we are in the cycle, all the valuations of stocks right now, U.S. stocks, it would make a lot of sense for stocks to get bearish from this point. But, Mr. Market is a crazy guy and will do crazy things, especially the stock market in particular. Commodities and bonds, these things are a little, less crazy. Mr. Market, the guy we call Mr. Market, from Ben Graham's book, by the way, he called him Mr. Market this was from the 1940s. Mr. Market, he's referring to the stock market. He's not referring to the bond market or commodities, nor currencies for that matter. I mean, while we're, looking at the actual dollar index. Sometimes I think of this as a commodity, but yeah, it's a currency. Another chart that really caught my eye today was SMH. This is the semiconductor index. I was only surprised by this because the fact that Taiwan Semiconductors came out with these like amazing earnings, suggesting that the semiconductor industry itself is stronger than maybe what a lot of people expected. Yet this ETF, which is a collection of all of the semiconductor companies put together, only rose by 1.72%, still within this previous engulfing bearish candle. This is a very bearish looking chart. There's nothing bullish about this. And if we scroll out and take a look, for example, at the history of the peaks of many peaks of this exact product, the SMH ETF, you can see you have a bearish engulfing red candle here, and then it goes down. Bearish engulfing of 1, 2, 3 days, huge move down. Bearish engulfing candle of 4 days, another huge move down. When the bears come into this market, they're strong and they drive it down. And it makes sense for them to do so. I'm generally bearish currently on the semiconductor industry, only because it's very easy to be bearish, something that has an enormous amount of speculative value priced into it. The earnings of these companies don't prove the value of the current of these stocks currently. If this was a grocery store or any other business, you would never pay that much for that business based on how much money that business is currently making. All of the massive prices of companies like Nvidia and other semiconductors are 100% based on expectations of continuous growth of earnings. And if, as soon as all that has to happen, as Graham says in his book Security Analysis, all that has to happen is it to slow down the growth of earnings for the price to contract massively. And so, there's a really strong bearish case for semiconductors right now. It's in a mania phase. Everybody is hearing about AI, 1,000 times a day. I use AI every day myself. I don't pay for it. This is another reason why the whole industry, I'm a little reluctant to believe that there's an infinite amount of value in terms of return on investment, only because it's becoming really cheap really fast. Artificial intelligence it's not hard to get. Like I'm saying, I have access to free tools that are serving me in my own life massively, and I'm not paying a dime. They're not getting any profits from me. Maybe from an ad or two, maybe. But I digress. This head and shoulders top in SMH, it looks like it will likely play out if this previous engulfing red candle, does what it normally does. It will drive this market lower, and if we get to the neckline and below, well, watch out below. We could lose 50% in this very quickly, in my estimation. On the flip side, everyone is still really scared of China, and so the valuations of their companies are dirt cheap, like blood in the street kind of dirt cheap. They've been dirt cheap for a while, which is why I've been holding them for a year or two. I've been maintaining 10% for a while. Since it's 40% run up, I became about 15% of my portfolio. Now we're back down. I bring this chart up today only because something that really caught my eye. It looks to me like a pretty clear bull flag wedge, a declining wedge like this has a pretty good chance of breaking out to the upside pretty significantly. This looks very bullish to me. So this, if you didn't get in down here, maybe this is buying opportunity. Again, no advice. You are responsible for all of your investment decisions and indecisions. And that's all from me and my crystal ball. Hope you enjoyed. Thank you for watching, and see you next time. Robschild.